Good folk. I just tried to reply hashtag same to you in the chat of my own stream, and YouTube rejected my comment because it thinks it's spam. Let's see what I want to pull up today. How do we get this? What's up, Guido? How's it going, man? Hey, Douglas, what's up, man? Thank you. Welcome. We'll get started in a bit once we get some people in the room here. How's everybody's week going so far? That's already February, I guess. I've been away for a bit, recuperating my spine. All right, let's see if I can. Up in Sweden. What part of Sweden you in, man? My three guesses are Stockholm, Visby, and Malmö. That's what I got. I think we might. I think we might see something like that. Let's take a look here. Let's see how we doing over on trading views. Oh, I have to verify my. That's new. Had to verify. It made me verify that I was not a professional investor. Thank goodness I'm not, or I guess that I wouldn't have been able to show you guys stuff on TradingView anymore. All right, let's see. Oh, I gotta do this. Let's see, we're visible here. Yes, we are. Okay. Let's hide this. Let's make this a little bit bigger. Can we auto? There we go. Not too exciting a day today. Got that kind of slip down here to the downside into flatland. Hanging out around 2350 right now. Yeah. I figured we'd close below 23, but we'll see. Maybe they still got 45 minutes. I'm surprised we haven't seen a bigger reaction to Trump announcing more tariffs. More tariffs? Maybe they're just alternative tariffs. That's why that doesn't matter. Starting to think I rolled streams in 2027. No, man. I strained. I mean, I've had a history of back problems, but I strained a muscle pretty bad, and so I really couldn't quite get out of bed for a couple weeks there. So couldn't sit in a chair. That was rather difficult. But no, we have streams. Yeah, Guido, you mentioned maybe you thought warrants had something to do with it. How would you think, like with respect to hedging the warrants, or what do you think is keeping? What about the warrants you think are keeping us there at 2350? What's up, Tom? Happy Friday, man. Trap log. Sure, we're going to close below 24. Probably we're going to pop next week before getting back down to April OPEX. Yeah, I could see that. That makes sense. I am doing better now. Still not 100%, but at least I can sit up in a chair for several hours, which is important. Yeah. Yeah, I think there's a strong case. I think there's a strong case to be made for, down into even April OPEX. I'll lay out my thoughts to what that's going to look like. Taking a look at stuff through a little bit more of a new theoretical framework. I'll introduce to you guys once we kind of get a quorum here. Well, we're getting up there. We got 25 folks in here, which is good. Hey, cheers, C6D6C6. No, yeah, I'm doing better. Back is definitely doing better. It's the way it goes, but I'm doing better. Agent JB1 is in the house. What's up, man? Good to see your face too, Tom. Thank you very much. Douglas, good question. I will sketch out this theory for you guys in a bit, bring you up to speed with some of what I've been thinking about. All right, Guido sharing his thoughts here with respect to warrants. Warrants seem to be holding 4.2 to 4.3 price range, even seem to be a bit disconnected in terms of GME. They are. I mean, that's a very interesting thing. I do not necessarily understand what is going on with warrants in terms of their pricing. Ideally, right? So if you want to understand essentially how they are priced versus the options chain, or how what their theoretical price is, then just take a look at a $32 call essentially for October OPEX. In fact, I think a $32 call for October OPEX should be priced actually slightly higher, because it also gets you 10 warrants, right? So it gets you 0.1 warrant. So technically the October OPEX call for next year should be worth more money. but nonetheless, it's not. So they're supposed to just be priced like with normal Black-Scholes Merton, but that's not what we're seeing. So there must be like, interestingly, it must be difficult, I guess, well, here's the thing, right? It must be difficult to actually FTD these. I don't know how you go about failing the warrants, and there also isn't like an ETF that has these. So you can't, I don't think you can just get these from doing your normal thing with an ETF. Let's take a look how the October. All right, so there's one with warrants and there's one without. The one without warrants for October, $32 call is significantly less. A $32 call for October is priced at the bid-ask spread is 209, 232 right now. That is significantly less. So the warrants are priced at about a 70 to 75% premium over the calls. I guess the thing is, it's not necessarily guaranteed that the warrants will expire. So you can exercise, or you can hold on to the warrants, and there is a chance that the company can extend them. So it's not necessarily that they will expire and then you're out of your money. So, hey, cheers, Amglow Blue. Good to see you, man. What's up, out here, Sensei? Thanks, man. Yeah, I appreciate it. I was having a hard time, but I'm back and sitting in chairs again, so this is a good thing. Yeah, so I guess let's go to we'll go to Douglas's question here, insofar as what thoughts are on GME price action days before Q4 announcement. So what I'd like to introduce is a framework kind of going into how I'm thinking about what the price will look like leading up to that. One of the things relies a bit on on some of our classic metrics for cycle theory stuff, and the other has to do with some things I've been discussing with a few folks about what actually may be going on with swap stuff, based on a bit of information from a very unlikely place, the Epstein files. So we will take a look at that. Now that I've said that word, maybe the algorithm is going to pick that up, and people will just flood in to hear about the Epstein files. But so I guess we can start in the first place just with thinking about kind of normal cycle theory stuff. So let's hop over to TradingView again, and we will bump out to, let's see, daily. Yeah, daily sounds good. So normal cycle theory stuff, right? Obviously, we've got here, we've talked a lot about these sort of, these periods, right? So obviously, right, we see this type of move over the course of several months, right? So here is a move up and then down, and then 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 up and then down. Difference here, of course, is we did seem to kind of drop out here with respect to our floor. Now, what we talked about, of course, before I had this whole back issue, was that it did seem like what resulted in the drop of the floor was the fact that we had the warrants. So based on filings, right? So the warrants are being treated as though they are outstanding shares, curiously. So they're being treated as though they are outstanding shares. They're being treated as though they are already existing parts of the outstanding. So weirdly, that's like the shares that are shares are being priced as though there were current outstanding is around what, 447 million plus 59 million warrants, I think comes to 507 million outstanding. So if you take that, you add in our cash, and you add in Bitcoin, just as valued as it is. Obviously, Bitcoin is also decently depreciated. So that kind of gives us our new floor at kind of around that 19 or that $20 level, between 19-20. So that's definitely responsible for this lower floor here. I think there is a decent enough chance that we do get that tested again, while the warrants are still extant, unless somehow GameStop comes into a significant amount of money. If we do, if Bitcoin starts to appreciate significantly again, if we get some kind of surprise earnings beat, something like that, I impressions on earnings seem to be that, yeah, okay. They've given us some pretty high estimates in terms of revenue. It's going to be very difficult to beat those projections. GameStop also announced that they closed about 500 more stores, which in the long term is great for the business. But that seems like the type of thing that they would go ahead and use to sell the news, right? So I think there's a strong chance maybe they kind of, based on how we went into February OPEX, maybe there's a chance that with March here, they kind of keep us maybe kind of up in the 23, 24 area for an extended period of time. Options profile right now basically says we don't really have much to our downside. It's not like we've got a lot accumulated at $22. That is typically a mark we've seen kind of on the way down, where there's been some accumulation there to kind of give us a sort of mid-range cushion to the downside. That isn't there. That isn't there really across any of our expiries for between now and April. I think there's very strong reason to suspect that April will be a desired low point, because it is a warrant-tied options chain. Again, that's based on the fact that the warrant-tied options are kind of a mess. It's difficult to do delivery in that sense. It can cause the warrant price to really go up quite considerably. That is a theory that we took going into January OPEX. January OPEX was very low. I think, right, so the next two major OPEXs we have with significant warrants tied to them are April and June. So I think wherever we are relative to those OPEXs, there's going to be some sort of a push to make sure that that we head into those OPEXs to the downside. Now, what that does mean, and this is sort of something I alluded to earlier this week, monthly OPEXs that do not have warrants tied to them are therefore, we're a little freer, right? Institutions are a little freer with respect to settlement. They can be otherwise typical. Don't necessarily have to say, make sure things are extra pushed down with respect to, not wanting to deal with say warrant settlement stuff. You'll notice that December was that type of OPEX. November was not. January was not. But December was. February is now, and March will be, right? March was only added very, very recently. These do not have warrants tied to them. So there can be a little bit more volatility. There can be a little bit more generosity in terms of the price going into the print there for OPEX, I think, to allow, let's say, less rigid, less deep bearish of a close heading into there. So my initial thoughts from the January standpoint, where we'd see that volatility, we did. If we take a look at the chart here, Right, I mean, if we get close here, we did stay up a little bit more than I thought we would here. So I thought we would basically within about 2 or 3 days kind of make our way down. I thought we'd maybe be about at least $1, maybe lower than we were heading into February OPEX. We obviously do see, we did have this kind of kick back up here with the Ryan Cohen tweet the other day, which was cool. But yeah, it's around here. So we do in terms of right. So thinking of putting our cycle theory hat stuff back on in terms of FTDs. Two groups of FTDs that I'll call out. Also put this in the newsletter next week. But let's actually hop over to FTDs real quick. So this is what I want. GameStop FTDs themselves are not crazy. So we got end of January data. We have some, and as you can see, right, they're kind of rolling here. So they're not. I mean, that's not crazy. But actually, let me zoom in. You can't really see that too well on the screen. Let me get in here. You guys see that okay? That's a bit better. Oh, it shows up gray on your screen, not blue. So I'll just leave that like that. So yeah, if you take a look, right, so we do have some rolling FTDs. We do have some stuff really towards the end of January, which is what we expect, right? So these look like they're things. These look like FTDs associated with Ryan Cohen's insider buys, back early January. So I think we have a strong possibility of seeing these cleared. So this would be basically first week of March. Basically, I think I did the Bernoulli formula. It comes out to about March 6th to March 10th. Bernoulli formula worked out actually very well with respect to the early December FTD. So we kind of had that FTD period between XRT and GME. I mean, it may be that they function really, really well, specifically with sort of an XRT GME combo. That's worth keeping in mind. But right, so December, what was it, 2nd and 3rd, and then 11 and 12, and that more or less that kind of bookended the post OPEX to what was it, February 3rd run. That more or less mapped pretty closely to that run. So with the GME FTDs, we don't have anything crazy here. It's not in the millions like we saw in early December. We have it's rolling FTDs, but in the a couple 100,000. So that might come into play beginning of March a little bit. The really interesting bit, though, which seems to matter, and this is something I haven't confirmed too much, although this may have been related to the Bitcoin move, is IJH fails. So IJH was another one of those funds that Richard used to track on his sheet. And we had a huge pile of IJH fails when, would you look at that, 126. That's actually the exact same date that we had the biggest chunk of this recent wave of GameStop fails. And again, that's what? That's T plus, I think that's T plus 3 from Cohen's buy. I think that's T plus 3 from Cohen's first buy. Yeah, which is that first checkpoint, but maybe there could have been options related because it's T plus 5. Well, it would have been T. It gets recorded on T. It's T plus 3 from Cohen's buy, but it gets recorded on T. What's going on that Thursday? What's our price action like? Actually, I don't want this trading view. This one is the one. So 26th. That was a pretty big day. That was our shot up to 25. Yeah, so I'm guessing they did a little something to make sure that kind of stopped right there at 25, and then we tracked back down again. Yeah. So interesting. So that's worth keeping an eye on. These are both on the 26th. So that would project that we would see. I mean, the end of that Bernoulli formula deadline is going to be between March 6th and March 10th, I believe. Let me count it out here for you one more time. 26th. So T plus 1, 2, 3, 4, 5, 6 is the third. And then we're going C35 is 7, 14, 21, 28, 35 is March 10th, and then T plus 1 through 4. Okay, so some of the earlier GameStop FTDs are going to start to get cleared between the 6th and the 10th. The IJH ones are going to fall between the 11th and the 13th up to pre-market on the 16th. So the absolute last day, if they do have to clear those fails, if they are related to GameStop, is going to be the 16th, and that does more or less line up with what that looked like last year. That's just kind of low here, and then we had a run right afterwards prior to earnings there. So let me talk about another factor that's kind of come up here, and I want to address this question regarding Burry's thoughts here. Somebody asked about Burry saying it's not possible for swaps. It's not possible to hide large short positions in swaps without it being more obvious. Yeah, so I definitely want to get to that. Let me just check in with chat, see how well we're cooked. Chat, is this true? That's our next phrase. What is going on? Yeah, that's the question. That's the question, my guy. That's what we're trying to figure out. What's up? Blessed Beyond Measure. That's a great name, man. I too am blessed beyond measure. I'm glad you're here. Burry is a BlackRock plant, and we just need to wait on the next macro POI upcycle. Somebody's been watching, what's his name? Pontano? Get a little free publicity out there. Mr. Pantaloons himself. Hey, I don't know. I don't follow his stuff closely enough to know if it works. If it does, if you guys are if you're rocking it with his trades, then by all means. I just recognize the lingo. The lingo. We have our lingos. Pontano has poise. I have chat. Are we cooked? CC. I just realized if you look at the drop from May 25 peak into sideways summer, all the movement happened on offer when we otherwise would have slowly trended down. Yeah, man, that's exactly right. The reason why Cohen picked those particular points, I believe, is so that the company could capture some of that move. So, the company was able to go ahead, offer, take some of that value, take some of that upside, and convert that into something measurable on the company's books. And then, that's a pretty big signal, right? I mean, it played out exactly like the price action. The way the algos moved the price was exactly like we saw it back on, the first time around in March. Happened exactly. Right, exactly what the day of the pricing, what happened after hours, right? That whole thing looked identical. So if you knew what that was going to look like, and I guarantee you there are traders, who knew what these types of things looked like a little bit more intimately. They knew exactly how to trade that stuff. I mean, I forget who it was. Somebody here specifically saw that and bought, I don't know, just 50x'd a bunch of like weekly puts, like, $20 puts or something the day of. And, because it was really, if you had long puts on that particular day, not only did the price go down, but then when it hit the ground, IV just went insane. So like puts in that particular moment, right? I mean, I essentially don't trade long puts, but if you happen to have gone into long puts at that particular moment, like insane returns, right? So yeah, there would have been a longer downtrend, I think. And then really what knocked the floor out for us, moved us down a little bit. That $2 or so, or that dollar, $2 or so, was just the issuance of the warrants and them electing to factor in, preemptively factor in the warrants as dilution, but not collect cash, right? So before the cash is priced in. Now, there's a strong enough theory here, I think, to suggest that, and this is not necessarily popular, perhaps among some folks here, but not necessarily here, meaning live, but some folks out there in the ether. I think there's a good chance Ryan Cohen, he has to make some difficult deals, and I wouldn't be surprised, right, if he's able to disclose some certain things to to various insiders in the financial space or financial journal, who leak this or that so that this can happen, right? So like people knew about the Bitcoin offering thing. I think people knew that Ryan Cohen people knew way in advance that Ryan Cohen was going to go ahead and make an announcement. So the Bitcoin thing got front run very hard. What I think probably happened there, so this is now looping this back to our thoughts in terms of the Bernoulli formula and calculating when we were going to, because we had tons of FTDs right around earnings, right around here, right? We had tons of FTDs in here, and I think, right, so we were scheduled. Essentially, I remember talking about this. We were looking at getting a peak right in here to get a second kind of cat ear thing. But I think what happened instead is, rather than get this 1-2 punch cat ear thing, right? Just like we got here, just like we got here, just like we got here, right? This pattern comes up a lot, right? Here. We instead got we got the one spike, even though it looked like we were going to get the two. And I think it is that there were a bunch of FTDs that got cleared early in this particular move to give us that huge move, and give us this really tall peak here. Obviously, then when in this area, when we didn't go to the upside, it was very clear we were going to go down. So I actually did have long calls that I got down here, held them into here, and then I was like, oh, we're not gonna. Was it Friday? I think I held them into Friday right here. Yeah, and then it was clear when we weren't. When stuff wasn't happening, I was like, all right, we're out on these, and came away with, I think, maybe only like a 5 or 10% loss on them, which was very good. But dodge a bullet there. Chat, that day we were not cooked. Praise be. But okay, so what does that mean for these particular FTDs? All right, so they can go ahead and clear stuff early. It's really important to remember that they can clear stuff early. What they will want to aim for is, obviously, it's better to clear the FTDs when the price, you want to kick it down the road so that you can clear it on the lit market when stuff is as low as possible, right? So when you've got the best pricing, I suppose, over in the obligations warehouse. So if GameStop is trading at around $20, yeah, you want to clear the FTDs then. You want to punch in that VWAP then, rather than wait until, rather than do it now, say at 23, but maybe you want to do it in smaller chunks. You can do something like that, and that kind of gives us those little kickbacks as we have that kind of longer downtrend. So it's possible we stay up a little bit more in March, and then we wait until earnings, and then they really drop us into April. But what's very interesting, I would say, and this has to do, right? So where was that swap comment? Yeah. So, I mean, I do talk to some folks who look through the swap data, fairly regularly. It's very difficult. Again, I am not an expert in swaps. I do not comb through the data. I'm not always sad but truthful. Um, I will tell you, it is very difficult, I would say, to find stuff in the swap data. Um, stuff that is marked, any kind of number, any sort of basket, right? It's very hard to know if GME is in there. Um, it's really difficult to know exactly what is in the swaps. I'll say that. That's at least what I can discern from my very limited understanding of what's going on there. The data is public, but like very oftentimes, I think it's too labor intensive to decode exactly what is going on in those swap baskets. And the places that do have the labor to do that and understand what they're reading, I mean, yeah, there probably are trading firms that do know and that do understand swap positioning and that trade stocks, right, based on the alternation of swaps. Who knows what exactly those swaps are labeled as? But it seems very difficult to acknowledge, right? So he doesn't think swaps are at play. I don't know, man. Like, it's how do you get price action that is this cyclical, right? If you're not dealing with swaps, is the thing, right? What causes this degree of regularity? What also causes this degree of seasonality, right? We see similar patterns unfold from season to season. Why does that happen, right? Why does this whole thing look like this whole what's going on here, right? This seems too rhythmic, right? Why do we have, say, exactly as Richard Newton pointed out, right? Why do we have these dates that say like very close, very similarly, right, on these kind of these periodic cycles that end up being lows? Like, how can you track lows to lows to lows and actually be able to predict them with reasonable regularity? I mean, those seem to be the case right around March, right, when we did have some clear swap data. That's sort of the last time that I had some data where people were actually able to say like, hey, yeah, here's some, I think it was actually Chewy swaps. It was not so much things that were labeled GME, although there was also stuff labeled GME, but Chewy swaps as well. So there's sort of another idea that popped up here that I wanted to bring to your attention. And it's this idea, right, that a fairly common swap that is used is a 53-week swap. Okay, that's important, right? Because you could say, okay, well, there are 1-year swaps or 18-month swaps or something like that. Are there 2-year swaps? Like, what's really the typical length of swap going on here? And it seems like 53 weeks is a very common swap to encounter. Where do we get that data? Well, it just so happens that we have a hint from our boy Jeff here. So, where is it? Oh, why is it not coming up? Why can I not share this image? Let's try this. There we go. There we go. Okay, so this is a little bit. This is from the Epstein files here. And let me zoom in so you can see this a little bit better. So this is from Paul Barrett. I'm not exactly sure who Paul Barrett is, but this is dated 2012. And this is a letter from Paul Barrett, an email from Paul Barrett to Jeffrey Epstein, wherein they're talking about having long swaps on Apple, right? So apparently in 2012, Jeffrey Barrett had opened a 53-week long swap on Apple. So it was a $3 million swap, opened at 339.48. Stock at that time went to 453. And that granted them a profit of $915,000. So he says, I think we should roll it into another 53-week swap. So this suggests, right? This suggests that on January 30th, 2012, a 53-week swap that Paul Barrett had opened long on Apple for Jeffrey Epstein was getting close to a roll date. So, okay, so this tells us, 1, 53-week swaps are common. 2, rolling 53-week swaps, continuing to do this is actually ways that, let's say people, I guess people with the ability to open this stuff up can go ahead. And there's ways that they do treat this, let's say. So Hadouken says, Paul Barrett is a former JP Morgan private banker and in-house trader who managed investment assets for convicted sex offender Jeffrey Epstein between 2017 and 2019. Oh, he did it before then, as we know now. Let's see. Barrett founded Alpha Group Capital to manage Epstein's money directly, focusing heavily on technology stocks, including holding a large stake in Apple. Barrett executed trades in currency options, credit derivatives, interest rate swaps, and bonds, primarily through Deutsche Bank. He was a long-serving private banker at JP Morgan before becoming Epstein's manager, continuing to work with him even after JP Morgan dropped Epstein as a client in 2013 due to reputational risk. After his work for Epstein ended, Barrett accepted a senior role at Citigroup. Interesting. Though Citi later terminated him in 2023 upon learning of his deep involvement with Epstein. Yeah, how about that then? How about that then? So one of the things that came up, some folks I was talking to came up with this idea here in terms of taking a look at what GME does on a shifted 53-week basis, right? On the understanding that if there are institutions that are opening swaps short on GME, that it seems reasonable to assume that a fair number of them will be 53-week swaps. Okay. Obviously, this is a theory. This isn't right. This isn't proven. But okay, let's see what this looks like in terms of what GameStop's price action does. Let's say with respect to looking at this kind of 53-week projected mark into the future. So obviously not saying this is exactly how it works, but okay, what does this show us? Let's say when we go ahead and take a look at this. So we'll bump out now. Make sure this is visible. It is visible for you guys. All right, let's normalize this a bit here. Okay, so obviously here's our GME weekly chart. So we can put on an overlay here for 53 weeks. And as you see, we get something that looks like this. So right now I have this overlay set to high, let's say open, high, low. So yeah, open, high, close divided by 3 is what the values of this are. And what we see from this curve, okay, we can see, hey, if anyone is incentivized short in GameStop, they will want the price below whatever the price was 53 weeks back by that particular week of price action. And so if we take a look at the chart, we can basically see when short institutions have the stock under control, let's say, because price action is occurring under where potential swaps would be. And we can see when they are not in control of the stock because price action is way above where their 53-week swaps would be. So not surprisingly here, 2021 is way over this line, basically the entire year, right? Okay. And let's say that lasts, let's say from here, go back 53 weeks. That lasts from the 11th of January until the 24th, okay? So the period here, excepting whenever I guess down here, they weren't even really in control back here. But it's pretty close, right? They were just kind of sitting right on top of it. Very close, not quite. But it really starts to take off right around 11th of January, right? This weekly candle where we really started to move. And that lasts exactly 53 weeks. And exactly at 53 weeks, all of a sudden, most price action falls beneath the curve, right? Except for some very limited marks here, right? A couple weeks here, 1 week here, we got 1 day goes over this line, right? 1 week here gets a little bit over this line, comes back down, right? And then we're very comfortably under this 53-week line. Okay. Under, right? And then all of a sudden, what is it that takes us back over? It's not those 3 bullish weeks coming up from the $10 touch in late April, May, and early May. No, we don't actually move back over this line until, Roaring Kitty comes back. Roaring Kitty is what makes the stock then go back over this curve. And how long exactly do we stay above this line? So we go from the week of the 13th of May all the way to right about here, right? And so we go all the way to the 19th of May. That is 53 weeks, right? That's 53 weeks. And this candle, the 53rd week candle, ends up underneath this mark compared to 53 weeks back, right? So this 53 weeks in the future. So what this says is that on May 19th, despite what was going on with the Bitcoin stuff, okay, short swaps that were entered in here on the 13th of May would have been profitable or at least break even. And after that, all price action, once again, is back under this. Now, okay, this is I'll close over 3. So we did have a little bit over here with the warrant issue. But I mean, what matters is the actual price. So if we go here and we set this to say like just what the closing price is, might give us a clearer idea. All right, here's closing, opening price. Here are the highs. High works maybe a little bit better. But you can see, right, we're mostly then hanging out here underneath this. Okay. Doesn't line up exactly, down to say the day. But it does more or less look like there is a 53-week period, especially going on, where when we go over this line, we end up in this 53-week period, and then we go back under. It does suggest perhaps that Roaring Kitty, right? Roaring Kitty's tweet right here around week 19, the week of May 19, right, may suggest. So that was exactly 53 weeks after his return. So or not his tweet, where he unfollowed Ryan Cohen and unpinned his GameStop tweet, right? That was 53 weeks. Okay. So what's happening there maybe with that 53-week bit could be that, right, if some sort of event kicks swaps, let's say, if everybody's short, right, if there are all of these swaps entering all swap, and all of a sudden you go over this mark, institutions or hedge funds, whatever have you, may then just go ahead and say, push some kind of eject button, right? Which means all of a sudden they buy long swaps in order to completely delta hedge themselves. They lock in some loss, but then they can open up other short swaps on top of that. So long as they stay below that 53-week mark, they're okay. So how does that affect thinking about, right? What does that add to us, say, thinking about what's going on heading into March earnings here? Well, it does say, okay, going into March, we've got a little bit of space right here, right, to stay below this mark. But March 16th, which is right that tail end of where we're expecting some of those FTDs to show up, especially the tail end of the IGH FTDs, we can, right, that's pretty low, right? That's around, that's in the, it's higher than, if we go off of the highs, it's 23. If closing prices matter to a certain extent, I mean, I don't know when exactly these things have to be rolled or what the reference price is, but it would seem like there'd be some desire on that part to make sure that we stay below these marks. But then obviously the season, our Rainbow Road season, which more or less right down to that April 6th one. So more or less from, let's say, the 13th, which is very close to April OPEX, all the way up to June 15th or so, there's a little bit more room for something of a run. So my thought is, yeah, okay, March OPEX, if we're taking this into consideration, not just our cycle theory, but if we're taking this into consideration, they may use a bearish Q4 earnings, right, excuse, to keep the price low, basically in this pocket between 16th, which is the last day, right? In the pre-market of the 16th is the last day to punch in that creation order to clear out those IGH FTDs. And the week of April 6th, so up 6th to the 13th, which is right before April OPEX. The week of the 13th is April OPEX. That period is a sort of critical period based on where swaps may be. I mean, did they enter low here? Did they have to roll swaps here? These are very close to where we had swaps last year, right? Just where we actually had data, right? So we did have, for example, we did have two groups of swaps in the data that we had 53 weeks prior to these two low marks, right? So March 28th to 31st, right? So this was when a lot of folks, like when Han was talking about like Richard's theories and stuff, and talking about the red star, when people got introduced to this idea of the red star swap, this was something. So Metro Ballin, for example, had published some data on swaps in particular, and Richard had independently come up with the red star swap theory, and he had put it on the 28th, and then Metro Ballin's data, which we talked about on the stream. If you want to go back to some of our recordings from last year, Metro Ballin's data did say that there were large notional values of GME swaps that were expiring on the 28th and on the 31st of March. Okay, so if those swaps were rolled, because if we bump back here, 53 weeks back, those short swaps were underwater, right? I mean, maybe they delta hedged long, but those were not good 53 weeks back. If you go a little bit prior to that, so if you go 53 weeks prior to that, that would be right around here. And that's still, they swapped down here. And I think that's what we saw, right? That they were basically underwater on these things. If they swapped in here, and then, yeah. So they may have rolled those, right? So rolled those, oops. In both cases, yeah, this is 2 years back. This is 1, and then this is 2, so over here. And it's both well below where this mark is over here. So, right, so they may have rolled this, right? We saw those dates. I think the other one was like the Huang swaps, which were earlier, which I think were around like we thought they were around the 11th. And I think Richard said that was like his Pink Star swap. And they were the Metropolitan swaps that were around the 11th. So that's these two low marks, 53 weeks prior. Here on the 10th, the week of the 10th, here, and here the week of the 31st. Okay, so that's these two marks here. So they were, if somebody had, like we saw that there were swaps, okay, if that data is to be trusted, if that data is accurate, if it wasn't incorrectly interpreted, then there were GameStop swaps that were open that expired at these two low points, okay? And we did happen to go down into those two low points. Those swaps, based on their marks, what they were opened at, were underwater at these 2 points, okay? So if they were rolled, they would be rolled to here. They would be rolled to these marks if they're 53 weeks. Okay. So this makes me think, yeah, okay, going into earnings, maybe this is why we have such an exaggerated, why we have, high targets for Q4 earnings. Keep us low here and then allow us to kind of get a little move, clear out these FTDs, right? So these will get cleared here. They'll incur FTDs, of course, trying to keep this down and sort of pin down here for a while. Maybe there'll be news in early April, the Cohen's package, right? Late March, early April. They'll be, they'll have the meeting or the discussion in here, which also happens to be in here. And then once that meeting is had, there'll be an announcement. And then maybe, institutions go ahead and say, Ryan Cohen's pay package is approved. Oh, excitement. And then we start to move up, right? As they clear FTDs into May and early June. And then we just got to make sure, of course, they got to make sure that by June, things are back down, and then they can control things into late July, when possibly we'll have that little cost connected run, which was connected, back here, a little cost run in here, right here, connected to this move, this July run, which was probably clearing Roaring Kitty's like initial buy from back here, that then they swapped. Yeah. So anyway, that's not new theoretical package for you guys. That's kind of some new details to add to the swap pie. If you guys want to add like an offset indicator to your trading view charts, you can definitely do that. You can follow along with this. Obviously, right, this is very early theoretical stage. But kind of getting that 53-week detail does then say like, okay, this is, maybe this makes sense. This is why periods from month to month, they look kind of similar, but they move forward a little bit, right? So you remember Richard used to have this thing he talked about where, right, he thought that like, okay, some were on 6-month cycles, but some were on 5-month cycles. So it was like, okay, you'd have like one of them that would move. Obviously, if they're on 53 rather than 52-week cycles, it would make sense where you would see one sort of like a precession of the equinoxes thing, right? So you'd have like, what is it they say, right? The stock market is astrology for guys. Yeah. So you'd have that swap. You'd have that swap, right? The roll date would move forward 1 week every year. interestingly. So let's get to the chat. What's going on, chat? Let's see. Hey, what's up, Sharon? Yeah, happy to be back. I'm happy to be back. Yeah, my back's doing better, so I am not in pain sitting in this chair, I'm happy to say. Very nice to see you. Hadouken just closed the GME strangle at 23 put, 24C selling the puts when the stock was down during the week, selling the calls when the stock was up. Very nice. By Friday, they both expire. Easy. Nice, man. Good trade. Guido, what's this? The truck stop announcement has a PS5 on a baby changing table. They are trolling. I don't know the symbolism, but maybe you can enlighten me. What's up, Obsessively Gaming? What ideas do you have as to why warrant values are up? Yeah, we did. I think you meant, yeah, you asked this at 9:20. I probably talked about it. I know I talked about it, but I think it was probably after 9:20. Yeah, why they're up may have to be that it can't be. They may not be able to FTD it. I'm not sure. Do trade recursively into that fractal until it collapses into a single minute interval and then finally break out. That's it, right? It's just this. How do we make this bigger? Here we go. No, this. There it is. Yeah, right. This fractal. Let's find this. Just like this, right? It'll condense. What I would actually, to be completely honest, I mean, if we kind of keep, we got close, man. If we get, 2027, give it another year. I think we went over this too, right? On the weekly here. Give it another year, and this thing will probably go, what? Let's see. In 2025, this thing went from 1423 to 15, 16. So by next year, this time, the 500-week moving average should be up here at like around 18 something. Okay. So that would be, can we draw? Let's draw. That would be over time. Like this. Like this. Yeah. Like that. How do I change color? Like this. Right. So, there's the wedge. Just going to go right along this. Could do it. Maybe a little extra something. I don't know. But then down here, and then we come back, we do this thing, right? We do this thing again, dip below this guy, but now it's up at 18, and then Ryan Cohen does like one or two more offerings, something like that, by 2027, and then we go back down there, and then Roaring Kitty comes back again. That'd be super fun. We could do that. We can make that work. Guido says, like the 53-week theory, would like to confirm whether RK used any specific meme like the Uno Reverso. Yeah. Yeah, it could be a flip mode thing, right? Could refer to that. Yeah, hey, Simple Rig. I intuited your question, man. I intuited your 16 question. I think to get there, we gotta see more Cohen offerings. I think that's the only way we get down there. Or Bitcoin goes to zero, but I don't think it does. Some more Cohen offerings. I think if it's merger related and we head down to like 1850 at some point in 2027, that's going to hit the 500-week moving average. I have a very hard time seeing us decently go below the 500-week moving average. Yeah, man, I got it. We're on the same, dude. We read each other's minds. Come home to $16. Come home to the Mind Connection with Simple Rick. Yeah. Oh man, maybe I did miss you. Yeah, even though we were down, warrants are up. I'd be surprised. If we hit 16, the blast boffins will indeed be epic. If it happens. It would be so quick though, because it would be so below. It'd be so below like the blast boffins. Let me get 5 of those blast boffins. Yeah. RC buys, failing company. Prospects for GameStop, not good. Analyst rating changed from sell to extra sell. They could definitely do that. Look, man, like at this point, I think it's very clear. That what we are seeing, like everything that gets disclosed publicly is stuff that has been known already by select people for an extended period of time. It's like, what do people say? It's like, well, there's dead internet theory, but like stuff is fake, or the world runs on a delay. I mean, in some cases, that's a lot clearer than in others. But like a lot of stuff has a controlled flow of information to it, such that if you spend enough time focusing on what's going on, like you can figure this stuff out, like you can see it happening before it happens. But for a lot of folks, like they don't see it happen until it happens, right? And of course, when it happens is when people have the okay, everybody's positioned, let's say, to take advantage of whatever is about to happen. I don't think there is, like, for the stuff that we see, I think that for a lot of folks, people who are in charge of these, especially financial institutions, are not surprised. This does not arrive as a surprise. I think at this point, it is well known what is going to happen to GameStop. I do not think it is a question of will GameStop go higher. I think it's a question of GameStop will go higher. Ryan Cohen does appear to know what he's doing shepherding the company. They likely already know what his acquisition targets are. That's what I would say, something like that. And it's just a question of how high, not will it go up. I know that's not what gets presented in mainstream media. That's not what we see from CN. Although CNBC's been a little bit softer on GameStop recently, but Wedbush or Benzinga or something like that. They still, I don't know what's going to happen, and Wedbush won't move. It's like $13.50 price target. We think it's going to $11. Yeah, your swaps wish it was going to $11. I think. Is RC complicit, or that's just the game? Leaks aren't preventable. I think it's a combination of a couple things. I think some stuff is very difficult to hide for an extended period of time. In the financial world, I think it's very likely it's difficult to hide that stuff. That's number one. Number two, I think it is very bad to be seen as a rogue actor, right? There's one thing to be an activist and put out the manifesto like he put it out, right? That but what he targeted was CEOs. Okay, he targeted he put people who run companies badly. He didn't target the financial infrastructure. He didn't say banks. He didn't say he did say private equity. He did say kind of this like pipeline of private equity to CEOs, to consultants, that kind of a thing. So he targeted one chunk there, but he didn't call out market makers. He didn't call out, large banks. He didn't call out regulations. He didn't call out Congress. He didn't do that stuff. And I think the thing is that, he probably has to realize is like, you gotta pick. I think you have to pick your targets. And I think somewhere in there's a compromise. And that compromise is, be Warren Buffett 2.0, help make a lot of people who believe in the company a lot of money, try to make their lives better that way. Allow, let's say, other folks who do, like Ryan's Canadian. Like, is he going to come out against the U.S. government when, like, as a Canadian? That's not a good idea. So I would say there are definitely compromises to be made. And I think there's also inclinations here, because there's also the question of, hey, are you going to try to, because GameStop almost did take down the global financial infrastructure again, just like happened in 2008. And I think the question is like, hey, man, did you come in to make a very successful company, or did you come in to just wreck everything? Because if you came in to wreck everything, we will all collude to make sure that the game keeps going and you lose no matter what. We will make it as hard as possible for you to do anything, to get funding, etc. Someone is buying these bonds, and that someone is not, like, somebody is giving Ryan Cohen billions of dollars to try his whatever he's about to try, and to do this and to prop the company up. Okay. Someone is giving him, institutions are giving him billions of dollars. They may yet still give him billions of dollars. If he's going to accomplish what Michael Burry is writing about, he's going to have to purchase billion. He's going to have to be handed over billions of more dollars. And then he can take that and he can invest it and he can grow the company. And he can make GameStop investors who believe in him and believe in the company a lot of money, right? a lot of money. And we've talked about many times here just how precarious the actual investment game is, right? S&P doesn't really cut it, right? If you consider, and this is it, I forget, I saw I posted about this right the other day. I forget who this billionaire was. It was a billionaire I was not familiar with, but a guy who said, okay, inflation, basically you're dealing with, 7%. You're losing 7% of your purchasing power per year. He just came out and said that, right? So that's a guy, right? So I have this theory about, shadow stats. Obviously, I've read through what shadow stats has to say about inflation, looking at CPI and stuff like that. I've done some rough calculations as far as the numbers. It seems roughly correct. I don't know for certain. I haven't been through all the data myself. I've been through shadow stats numbers, and I've read those hypotheses and those calculations. I've done some rough estimates with, say, the historical appreciation of SPY. I was on stream when I told you guys what I thought where gold and silver were going to correct from. It went about 10% over what the delayed 2021 to 2024 appreciation of precious metals should have been, but wasn't. It went about 10% over what the estimated, if you took total inflation across that period, basically with all the money that got printed because of COVID, et cetera. Metals just priced up to about 10% over what they should have been already, and then corrected, hyper to the downside. So the S&P 500, right? Okay, gross average, year over year over 30 years is like 11% or something like that. Okay, but after tax, right? It's under 10. If you're holding for a very long time, obviously you're enjoying something in the 9s. If you have an IRA, then you don't have to worry about that, right? So you do have some tax advantage stuff that can get you a little bit more of an edge there. But basically, if your main strategy is not tax advantaged, just go out there, hold SPY. You're barely beating inflation, and maybe you won't, depending on what the first year is that you invest. If you invest in a year, like let's say the first year that you invested in SPY was 2000, right? Okay, the SPY shares that you bought in 2000 didn't become profitable until like 2017. Okay. So the first year also then can matter a lot, how much appreciation you actually get, right? Just going backwards, in hindsight's arbitrary. It is very difficult, right, to find something that can actually meaningfully mean your purchasing power increases over time, right? Difficult to do that. S&P 500 not necessarily going to cut it. So with Ryan Cohen, just like with Warren Buffett, I think he aspires to be the type of guy who makes, a lot of people who believe in him, who believe in the company, who believe in the principles of, sound value investing, of putting your money where your mouth is, sort of a thing, putting your risk with your interest, those sorts of principles. I think he said, okay, I'm not going to try and shake the whole foundation. I'm just going to try and do that part really, really well, because I believe I'm not too sure about me being able to shake the whole foundation. But I can make a lot of people a lot of money. I think I'm pretty confident I can do that. I think that's Ryan Cohen. I think that's what he's doing. So inevitably, I think, that's going to mean at times he's gonna be okay, right, with helping sort of keep the system together. And if someone says, hey, we kind of need to do this to keep the system together, he'll be like, cool, what's in it for GameStop? I'll help you do it, but what's in it for GameStop? And I think that's I think with GameStop, that's the best with him, and I think that's the best with the company that we really could hope for. I don't think pretending, right? I don't think having the delusion that you can shake the whole foundation, all of it, all at once. I'm not sure that would see. Maybe you could do it, but I'm not even sure that would be the best for everyone involved either. I don't think retail wins in that circumstance at all, right? I know a lot of folks over on Reddit, they like the idea of, hey, burn it all down and then, no sell, no sell, screw you, pay me sort of a thing. It's like, yeah, I mean, if it all breaks, then no one gets their money, including you, right? Except the other guys who are already, they'll figure out a way, but you will not figure out a way if your whole strategy is, I hope everything burns down and then I have my shares DRS'd. Tough. So yeah, that's essentially my outlook on Ryan Cohen there. So good to keep in mind. I mean, I don't think he's for any one particular, any one institution in particular. Like I said, he's not working in the interest of private equity. He's not working against the interests of the company. And he's certainly not going to do anything to save individual funds. Like if these guys cannibalize each other, I think he's totally fine with that. But he'll probably say like, okay, shelf offering coming, here you go, or we're going to do bonds, $4 billion, please, something like that. And just kind of let these guys go ahead and do their thing, Yeah. Makes sense. He's walking some thin lines to victory. Trust him implicitly, but hate the system. But he has to operate within that system. Yeah. Hey man, it's like it's like the Apostle Paul says, right? I forget exactly where he says it, but we are in the world, but we are not of it. The world is wayward. We are in it. We must live in it. But we need not be of it, in the sense that these things will go on around us, right? There are certain systems that will be operated, right? Like I don't know, like the Roman Empire in Paul's day, something like that. But so we will need to live alongside these institutions. Like there isn't a way around it. Like that's the thing. I had this dawned on me several years ago too. Once I realized that like 2020, 21 into 22 was like a really big financial awakening for me. Like I know some people got this awakening earlier. I wish I thought about this stuff earlier. That was kind of my awakening once, but it was just so laid bare, especially what was going on with inflation. I was like, oh, this is how this all works, right? Just started, reading and trying to understand what was going on with this stuff, just voraciously, right? To try and understand what had happened and what was happening and how all this works. And you guys have been here for a lot of that journey as well. Yeah, this sucks, man. I wish I didn't have to do this. Like, I wish I didn't have to trade at all. Like, I wish I didn't have to invest in companies. Like, it'd be cool if I could just have a job and that would work. But, it depends, right? Like, where are you going to go? I guess there are places maybe you can do that, or but it's I know what's happened, right? I saw what happens if you ignore that stuff, right? I love my parents very much, but they're not, they did not necessarily know about these dynamics. They were not necessarily privy to these financial dynamics, and I saw what it looked like to basically live your whole life. Work hard, have long careers, right? Invest in a business, etc. And then, not have nothing, but to like see your purchasing power so heavily eroded as a result of this stuff because you did not necessarily prepare to capture, very large, asset appreciation events tied to extreme dollar devaluation. Obviously, right? They trust the integrity of the nation and trust the integrity of our financial system, and then for that to happen multiple times, 3 times in their lifetime, very difficult. Very difficult. That's going to be something very difficult for most people. So, such is the way of the world, right? Such is the way of our financial system. Such is the way. Such is the way of a system that is harvested for the things of God are harvested for the things of man. This was Christ. That's why often I post that medieval painting of Christ flipping the foreign currency exchange, which was set up in the Temple of Solomon. Temple of Solomon is a place for God's people to come and commune with the divine. It is a place that is supposed to be set apart from the world. And yet, in Christ's day, in Jerusalem, the Temple of Solomon was being used to set up a foreign currency exchange, right? So that a foreign currency exchange could exploit the fact that Jews, for example, right, God's people from all across the world needed to come to Jerusalem, wished to come to Jerusalem, and needed to pay for sacrifices, and therefore needed to change their money into local currency, into Roman currency, in order to purchase animals for sacrifice. Exploited that fact rather than facilitating it such that the Temple of Solomon sacrifices, communing with the divine, could be made easier, right? And these were this was the priesthood that was involved in this, that had allowed this to take place. So something similar. It sucks to be able to see that happen, but such is the way of the world. Such has been the way of the world for thousands of years. So, take the wins, I suppose, where we can, and then, in the context of our lives, be the difference, right? Be the people who do not do the same writ small, let's say, with others in our lives, right? Render unto Caesar what is Caesar's, but unto God what is God's. So, I think that's where we will leave off for here tonight, folks. I hope you found this particular theory outline pretty interesting. It's something I'm going to be thinking about pretty closely, as we head into this next quarter. Obviously, very much looking forward to seeing how things unfold in February. A little bit of a higher close here than I would have thought. Say a month back, I was definitely thinking probably something in the 22 neighborhood. So 23.50, not bad. Maybe we stay up here for an extended period of time. Very interested to see what comes down the pipe with Q4. We're thinking about Ryan Cohen's pay package around there. Maybe looking at a low sometime, maybe a little bit closer to April OPEX rather than March OPEX, and then seeing if we're going to have ourselves a little bit of a rainbow road run there. So we'll be along for the ride here. Thanks as always for tuning in, guys. Thanks as much for all your great questions. You guys make all this possible, so really appreciate having you all along for the ride. Let's keep it going, and let's go GameStop, guys. So God bless, and we will we'll see you next week.